G'day folks, welcome back to Pete's Investing. It's March 20, 2024. This is the natural gas price update. Also cover some ETFs, including BOIL, UNG and KOLD. Now we're still bearish overall, but there are some bullish possible signs, so we'll have a look at that also. But we're also including a new trend table, and that looks like this. And that's where we cover various instruments, including natural gas today. And you can see there natural gas on the monthly, weekly and daily trend is monthly is still bearish. On the weekly, it's actually broken up into a neutral positioning, and on the daily, it's bullish. So some slight possible bullish movement there, but still overall bearish. Also including some FOREX currencies as well, which we cover occasionally. So first I'll cover the natural gas commodity price. Now, I don't show the monthly here, but I'll quickly. Here we've got the weekly, and you can see on the trends, we've got the ADX 25, it's still bearish on the weekly, broken up into a bullish momentum on the daily and bullish on the hourly. The CCI 150, which is the moving average band shown here, you can see the CCI is broken into the moving average bands on the weekly. It's actually broken above on the daily, so it's bullish there, and it's also bullish on the hourly. Now in terms of the price chart, let's zoom out on a bit on that one. I've got a, if I zoom out, I've got a Fibonacci expansion drawn on that. So if it does continue to break further down, we need to see it break somewhere below the 148 or even the 130 level. Now the critical point is it could actually go down to the 61% Fibonacci expansion, which is about the 112 level. But at the moment, it's looking slightly positive, as I said, because of the trends. So let's not get too ahead of ourselves. On the daily, let me just expand this as well. What I've got here is, you can see there the draw Fibonacci from that level to that high. You can see there it's just bounced below the 61%, and it's bounced off that. So that's a positive view. So had it gone much further deeper into the 61% level, that would have been a continuation of a downtrend. So it's looking positive at the moment, the last few days. Some bullish candles with a couple of exceptions. On the hourly, you can see there we had a bullish divergence on the CCI 150 versus the price, and it's actually hit our target. It's bounced further up. I have drawn a couple of diagonal trend lines here. There was one drawn initially when it was following that trend line to the downside, and more recently it's broken up and now following this ascending diagonal trend line. So I'll keep an eye on it, see how it goes, but that's heading up in a more bullish movement at the moment. Next we've got BOIL, that's ProShares Ultra Short DJ UBS, natural gas ETF. On the weekly, the ADX 25 is still bearish on the daily, and also it's a fresh breakup to a bullish momentum on the hourly. The CCI 150 is showing a bullish divergence. It's been doing that for a number of months now. Also on the daily, you'll notice there's still a bullish divergence versus the price. It made a little bounce, came back down, but that's still a bullish divergence between higher lows on the CCI versus lower lows, or in this case, double bottom on the price chart. On the hourly, you can see there's still a bullish divergence there versus double bottom on the price. So I expect that to bounce. We did have a small bullish divergence at that point there versus double bottom there, and that hit our target. But zooming out as well, there's still a bullish divergence on the wider time frame there. So here's KOLD, it's ProShares Ultra Short Bloomberg Natural Gas shares. Bullish ADX 25 on the weekly. It's broken up into a fresh bearish movement on the ADX on the daily, and bearish on the hourly. The CCI 150 is still showing a bullish divergence versus the price. If I zoom out, actually there's no divergence, that's bullish movement in line with the price. On the daily, the CCI is broken down into the moving average bands, which is a neutral positioning at the moment. You can see that it's slight retrace to the downside after making those highs. And on the hourly, it's also in a bearish mode on the CCI 150. So again, zooming out on the daily for a minute, between that Fibonacci range, it's actually come back down as far as the 61%, bounced up to our last video, and then making further downside. On the hourly, if I draw a Fibonacci between, let me just get rid of this one first. Draw a Fibonacci between that low and that high. You can see there it's actually bounced down from the 61%. So that 61% is always key. In this case, it's retracing back from that level and making lower price movement on the hourly. Lastly, we've got UNG, which is United States Natural Gas Fund shares. So on the weekly, bearish on the ADX, bearish on the daily, and bullish, fresh bullish breakout on the hourly. On the CCI 150, it's showing pretty much a double bottom versus lower lows on the price. So it's a bullish divergence on the daily as well. And that's almost a bullish divergence. You can see there that low is not quite as low. It needs to be a double bottom for it to be a bullish divergence, but this is still showing pretty much movement in line with the price. But considering the other instruments are showing a divergence as well, we could probably consider that as a bullish divergence possibly. But you can see there it's actually bounced off. I'll look at the daily here for a minute. The Fibonacci's, that's a retrace up to the 23% level, and that's that minor resistance at 1795. And lastly, as a trading idea for those new to the channel, we've got the daily here, and I like to trade when the weekly and the daily are aligned in long or short. In this case, during that period, you would have taken long positions only on the daily. Remember, the weekly would have been showing short positioning. So to be really conservative, I'd like to trade it when the weekly and the daily are in alignment. But in this case, as an example, the daily is going long during that period, so you would have taken long trades from that point on the 20th of February. You can see there the vertical lines highlighted on the two right charts, and the two right charts in green and pink are the hourly charts. The green one is the average down approach, and the pink one is the stop loss approach. So, and you would have stopped taking trades when that CCI broke into that moving average band at that point there. So let me just position that cursor there. You can see again on the right two charts, the average down approach would have generated $6,780 for that period of trading, and the stop loss approach would have generated $2,090. Now in both cases the profitability increased, but again, to be very careful and conservative, avoid taking long trades when it breaks inside this band of moving averages. Likewise, when you're taking short trades, take short trades when it breaks below the moving average band. Do not take trades when it breaks into that band. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.